delighted to start today's webinar, as today is the last webinar of this council year, and number of today's webinar is 172nd. So without wasting much more time, I request respected CA Hemchand Jain ji to please start the proceedings of today's webinar. Over to you, sir, please.
Thank you, Anilji. Thank you very much. And namaskar to everyone. Most respected Mr. Dhananjay Gokhale, the very learned speaker we have come across, and he has many credits to this to his career. इनकी इंट्रोडक्शन के बारे में मैं बहुत ज़्यादा कुछ नहीं कहूँगा, सिर्फ एक छोटा सा प्रोफाइल बताऊँगा, क्योंकि इनका व्यक्तित्व अपने आप में इतना ब्रॉड है एक्चुअली. So that will definitely, after hearing these deliberations from him, we will come to know. Otherwise, he's a very well-known speaker on the subject. And our chairman and vice chairman, CA Dr. Sanjeev Singhal and CA Vishal Doshi, they are busy in Central Council meeting. Probably this might be the last meeting of this council. And we welcome, we wish them all the best for their future also. And now I will just give a brief introduction of Mr. Dhananjay Gokhale. A brief introduction of a vast, talented and diversified personality and expert. Mr. Dhananjay Gokhale, CA Dhananjay Gokhale, has been in practice for the last 3 decades. He is a Bachelor of Commerce from University of Mumbai. And he's a partner, founder partner of Messrs. Dhananjay J. Gokhale and Company Chartered Accountants, which is specializing in providing management consultancy and auditing and assurance services in corporate and banking sector. He is a co-opted member and special invitee at Auditing and Assurance Standard Board of ICAI for the financial year 18, 19, 21, 22, 24, 25. Otherwise, he is available all the time for the institutes, and he contributes a lot towards the academic guidance for the institute also. And he has been nominated as a subgroup member of Banking, Insurance and Pension Committee of RCI of ICAI. He is convener of the study group formed for ICAI Guidance Note on Audit of Banks, part of core study group formed for ICAI Guidance Note on Audit of Banks since 2016 to 2025, meaning thereby he has been contributed to the ICAI Guidance Note for approximately a decade in guiding our professional fraternity on the subject. He is a member of expert panel constituted by AASB of ICAI for addressing bank audit queries of the members since the last 2 decades. He has authored many books, which includes background material for executive master's program for new age auditors by Center of Audit Quality of ICAI, ICAI Guidance Note on Audit of Banks for the last, 2016 to 2024 editions, ICAI Manual on Concurrent Audit of Banks, ICAI magazines, reference material. He is regularly publishing by WIRC on statutory bank audits. He is a regular speaker at seminars organized by ICAI across all regions and at Bombay Chartered Accountants Society on standards on auditing, accounting standards, bank audits. He is a regular speaker at College of Supervisors, Reserve Bank of India, NABARD, capacity building seminars organized by RBI for statutory auditors, seminars organized by NAFCB, WAMNICOM, and that is Vaikunt Mehta National Cooperative Management, Pune, district, state, UCB associations, federations. He has been part of staff training. He has been rather guiding them for the staff training seminars organized by public and private sector banks, urban cooperative banks, and association of banks. He is very much involved in the subject and has got a vast experience and expertise on the subject. Now I will request him to enlighten us for some time on the subject. Mr. Dhananjay Gokhale, welcome, sir. Welcome, sir, please.
Thank you, sir. Thank you, Hemchandji and Anilji, for organizing this webinar well in time, actually. I should say well in advance, actually, so that everyone gets a sufficient time to introspect about what kind of preparations one has for bank audit. So in this today's presentation, I will just run through the entire process of bank audit, right from the beginning of bank audit. That is when you get the appointment letter, or other, to be very frank, prior to appointment letter also. And I will just get through the process. So let me first share the PPT. Just a minute. So good afternoon to all the participants, and it's always a pleasure to speak at CA Institute, forum, especially Double SB, since I've been associated with Double SB for a long, and especially on the bank audit guidance note. As far as key considerations of audit in banking sector is concerned, what I will primarily cover is about the bank branch audit. I will have a passing reference about central audits, but that I won't be stressing upon because of time limitation. So what I propose to cover is a couple of topics which I've just jotted down. First is I will just talk a little bit about the preparedness whenever anyone wants to get into the banking audit domain. Then we'll move on to the steps which one should take once appointment letter is received for bank audit. Then we'll get into audit initiation process, the actual audit process, then audit conclusion, and a couple of points related to subsequent wrap-ups, which are really required to be done. So let's start with the first one, like how a firm should prepare for getting into the area of bank audit. Now, as far as bank audit is concerned, uh, whether you get the bank audit or not, first thing is that you need to be prepared for the bank audit area, that is the audit domain area or audit expertise area related to bank audit. So when one starts preparing for that, first thing and foremost thing is that one should have a sufficient knowledge base available within the firm. There has to be a well aware guidelines internally in the firm, and also the firm should be aware about or rather not firm, I should say, the employees as well as the partners in the firm should be aware about certain things. So I just jotted down few things. As far as bank audits are concerned, we need to be aware about which law applies to the banking entity where we are doing the audit. So let me just give a couple of examples. Suppose we are doing an audit of public sector bank or a private sector bank or a UCB. The basic law applicable to all the banks is Banking Regulation Act. So first and foremost thing is that we all must be aware about the Banking Regulation Act. We need to be aware about which are the provisions under Banking Regulation Act which apply to the banking sector. And then again, depending upon your type of bank and the type of assignment which you have got, you need to pull out the sections which are applicable with respect to your branches or your departments wherein you are doing the audit. Secondly, as far as as far as the banks are concerned, depending upon again type of bank, like suppose it is a public sector bank, then the applicable act which is there for public sector bank is different from private sector bank. Just to give example, is for private sector bank, Companies Act will be applicable. As far as public sector banks are concerned, the Acquisition Act will be applicable. If you are doing a urban cooperative bank audit, if it is a single state bank, then the respective state cooperative act will be applicable. If it is a multi-state cooperative bank, then multi-state cooperative act will be applicable. Under all these acts, there are certain sections which talk about what an auditor is supposed to report whenever he is doing an audit of a bank. So first thing is that the auditor should be well aware about what is required or what is expected from that particular act. Make itself aware about what you are going to check and which are the questions which are going to answer in an audit report. Second thing is that we need to be aware about the applicable RBI circulars wherever we are doing the audit. So typically the RBI circulars, broadly if we divide, there are three types of circulars. One is RBI Master Circular. Second one is RBI Master Directions. And the third one is all other circulars are there. Now, all these three circulars, they are applicable to all the banks wherever, unless and until there is a mention that it is applicable to a particular bank. So just to give an example, nowadays, most of the circulars are applicable to the regulated entities or to all the banks. So naturally, that will apply to all the banks irrespective of type of bank. There are certain circulars which are applicable to all the banks, but certain paras are applicable only to a particular set of banks. Like just to give an example, disclosure norm master direction is there. Now that master direction is applied to all the banking entities. But as far as certain clauses or certain paras are concerned, they are not applicable to small finance bank. Certain paras are not applicable to UCBs. So you need to be aware about which circular is applicable, and within the circular, which paras are applicable or non-applicable to the banking entity. Now, what the important thing is that RBI has been empowered under Banking Regulation Act to issue RBI circulars, which at times might supersede the accounting standards which are issued by CA Institute. So wherever there is a relaxation or wherever there is a kind of, I should say, a diversion or a different practice which is stipulated by RBI circular, then one has to note it down and should ensure that that direction is followed by that particular banking entity. Another important thing is that you need to be having RBI circulars handy, which are updated and which are recent ones. So just to give an example, suppose you are looking at IRAC norms, the latest IRAC norm circular has to be available with you. And based on that circular, you need to perform your function as a statutory auditor. Then the second, I should say, reference material is CA Institute's guidance note on bank audit. The last guidance note was 2024 and 2025 guidance note will be published at any point of time now. So better to keep yourself equipped with the latest bank audit guidance note. It's an elaborative guidance note which has been divided into two parts, that is part A and part B. Part A applies to the central auditors and typically head office departments. And as far as part B is concerned, it applies to the bank branch audits. Now, the entire guidance note is divided into different chapters. So wherever you require any guidance, wherever you require any elaboration of RBI circular or interpretational part is required by you, you can always refer to the particular paragraph or particular chapter and go through it and have a clarity sort at your end. Third thing is that, as all of you are aware about, there are multiple certificates which are required to be issued by bank branch auditors. So what one has to do is that whenever a certificate is required or whenever any additional special report is required to be issued, one has to refer to the ICAI guidance note, which was issued in 2016. It gives you the formats of illustrative formats of certificates and special purpose reports. And one has to either with the formats and depending upon the requirement, there might be a slight modification which might be required to be done based on which type of certificates you are issuing. Now, many a times it might happen that there are certifications which are kind of a web-based return, wherein you directly sign the certificates while performing the bank branch audit. Now, in those cases, either you need to upload that certificate additionally, because the certificates typically which you sign might be kind of an annexure to the main certificate which you are issuing. And you should ensure that the special purpose certificate or reports which you are required to issue, they are handed over to the bank before you sign off, and hand over all the certificates. Fourth thing is that before even commencing the audits, it's always prudent to have a ready checklist available with you so that you can make use of that for verification. And there are various verifications which are required in bank statutory audit, right from LFAR till audit report. And typically, if you talk about the checklist, those will be handy for you to ensure that whenever you are covering advances section, you are not missing out on anything. So ensure that you prepared the checklist based on typical banking products which are there. Means just to give an example, if you broadly talk about a bank, the products will be divided into deposit side and advances side. Now, as far as advances side is concerned, again, the basic bifurcation is typically into 3 or 4 parts. If you're talking about fund-based limits, the advances will be either in the form of term loan or in the form of CCOD facilities or in the form of bill discounting facilities. And if you're talking about non-fund based facilities, usually there will be 3 varieties, that is bank guarantee, letter of credit, letter of comfort, or letter of undertaking. So all these varieties should be readily kept ready with you as far as the checklist are concerned. Now, once you have the checklist prepared, whenever you go for a bank audit, just cross-check it about whether it is sufficient based on the product information which you will get from the respective branches. Another important thing is that always ensure that you are aware about that what is the deliverable from your end. In the sense, you need to be well aware that ultimately at the end of audit, what you are going to deliver with the auditee. So just to again give a simple example, if you're talking about a bank statutory audit, the basic deliverables will be the branch audit report. So you need to be having the standard format of branch audit report handy with you. Second deliverable will be the LFAR which you will be issuing. And third deliverable will be multiple certificates will be there which you are supposed to deliver. Now, based on the deliverables, you need to ensure that you are having completeness in the checklist and cross-check mechanism internally developed by your firm, so that when you go for a bank audit, you don't have to rush for preparation of checklist and you can have those things kept handy with you. Now, once you have this knowledge base prepared internally with the firm, Another thing is that you need to have multidimensional audit team, to be formulated for that. Now, what I mean by multidimensional is that you need to have sufficient expertise available within the audit team. In the sense, for example, if you have someone who is good in verifying credit portfolio, there might be other person who is good in verifying, say, KYC compliance. There might be other person who is good in drafting the audit report. So ensure that your audit team is sufficient to take care of all the requirements of the statutory audit, and always ensure that the audit team is having not only adequacy of manpower, but they are also having adequate knowledge base available with them. So equip them with the sufficient knowledge base. Ensure that you either attend, say, institutes various seminars which typically get conducted in the month of February or March. There are multiple webinars which are also usually get conducted for bank audit. And besides that, try to develop internal training, kind of seminars for your firm. There are two purposes for that which will be achieved. One is that you can have internal speakers prepared for your training purpose. And secondly, once you have these training sessions taken up internally within the firm, the knowledge expertise will naturally flow within your firm. Now, when you are undergoing the staff training, you are supposed to not only train them with accounting standards or auditing standards, but you need to create a general awareness about that which are the typical banking products are there. You need to also explain the staff about what kind of financials you are going to audit. So just to give an example, many a times when you are doing audit at the bank branch level, the deliverable or the ITIS function which you are performing may not be on the full-fledged financial statements like balance sheet, profit and loss, and cash flow. Many a times it will get restricted only to the extent of trial balance or maybe GLPL, I should say. So make the audit team aware about what are your deliverables, what you are going to verify, and what you are not going to verify. Also equip them with basic understanding that suppose the information is not available or sufficient or appropriate audit evidences are not available, how to deal with such scenarios. It is not mandatory for the auditor to simply give a certificate without verifying. In the sense, it is not even expected to do that. So always ensure that any certificate which you are issuing, you are 100% sure that sufficient and appropriate audit evidence was made available to you. If sufficient and appropriate audit evidence is not made available to you, you are free to have a disclaimer given in your audit report or in your certificate reports. So always make this point amply clear to your staff, whoever is, you have chosen to do a bank audit, that in case if the sufficient and appropriate audit evidence is not there, how one should report that in audit report or the certificate formats. Another thing is that you can prepare handy Excel tools within your firm about various verification processes, or if your firm is already equipped with CAD tools, make use of that as far as the banks are concerned, bank audits are concerned. Another thing is that since all of us will be using sampling techniques, pre-decide that how you are going to use the sampling techniques, how you are going to pull up the samples, what are the minimum thresholds you have decided to pull the samples for your verification. So once you have the sample techniques pre-decided, you will save a lot of time to draw the samples out of the data dump which you might be getting at the bank branch audit at the last moment. Another important thing is that have sample MRL prepared, that is management representation letter prepared, engagement letter prepared, and keep it handy with you. So as and when the audit progresses, you can keep on updating that MRL based on your requirement and based on experiences which you are coming across while performing the bank branch audit. Now, once you have this preparation done internally, within your firm, the next thing is that when you get the appointment letter, then there are certain basic things which you need to comply. First and foremost thing is that whenever you receive an appointment letter, instead of being too joyous about that, first go through the appointment letter in entirety. Go through the other communication also which might be received to you along with the appointment letter. Go through what are the expectation of the bank are there from your end as far as the deliverables are concerned, including number of certificates which are supposed to issue, and also the timelines which are defined in the appointment letter. So for example, if your appointment letter is specifying that you need to conclude your audit by say 6th of April, first cross-check with yourself that whether you are able to perform that job by that particular date or not. And if you happen to confirm that, ensure that there is a reciprocally internal arrangement or internal controls which you have built in to ensure that the timelines are not deviated. In the sense, you need to have a kind of a reverse working done as to if I want to deliver the audit report on say 7th or 8th of April, when I should start the audit, which are the things I will require prior to starting of audit, and how the audit will progress. In short, rough sketch of audit program should be prepared by you. Now, once you decide to accept the appointment letter, then the first and foremost thing is that ensure that you communicate with the previous auditor. So seek the details of previous auditor from the bank. Ensure that you comply with institute guideline about communication with the previous auditor. You can go further and maybe have a direct dialogue with the previous auditor also, besides written communication, so that you get a first-hand feel from the previous auditor about certain maybe important or vital thing related to your bank branch, which has been allotted to you. Subsequent to that, send an acceptance letter in the prescribed format, which the bank might have given you, and other document formalities should be completed by you. Then issue an engagement letter to the bank after you receive the communication from a previous auditor. And along with the engagement letter, my suggestion is that ensure that you are issuing a requirement letter to the respective branches, along with specific mention about the timelines to receive the details which you are seeking from them. And just have it, correlated with the target of conclusion date. So for example, if a bank wants to conclude a particular bank branch audit by say 8th of April, you need to be very specific about mentioning the timelines when you should receive the data from the bank, and always correlate that in case of any further delays in receiving the required data or documents from the bank end, it might result into a delay in conclusion of the audit. So it shouldn't happen one way. So if there is a target date given to you, there has to be a target date given to the auditee to give you the required documentation or required data available to you so that you can perform the audit in an effective way. Another very vital thing is that request for login in CBS beforehand, because many a times it happens that your entire audit team reaches at the audit place. You don't have a login in CBS, so practically you can't perform the audit function. So always make a request beforehand as soon as you receive the appointment letter and you issue an acceptance letter to the bank, and have the required logins available with you. Otherwise, you will always have to depend upon someone else's login. And many a times that may not be viable to use the login of other person in the branch who might be also performing his duties as a bank employee. Then once you have the audit acceptance process completed, the next part which you need to start off is have a visit conducted at the branch, have an introductory discussion held with the branch officials who will be there with you for the bank audit. Understand the various banking products which are offered by the bank and especially at the branch. So ensure that you are aware about the bank products which are offered. You are aware about various government schemes which are offered through the branches, and especially the schemes where the certifications are required. Make yourself acquainted with the respective government schemes. So you might have to visit the respective government scheme website to understand a particular product. So for example, if it is an interest subvention scheme, or any other CGTMSC or any other subsidy schemes are there, or insurance schemes are there, have yourself acquainted with what kind of schemes are there available with the customer to the customers of the bank, because many a times the scheme might get misinterpreted and it will have a ramification on your audit deliverable. I will give you a simple example. Like for example, if there is a loan which is covered by CGTMSC scheme, then it doesn't have any shield against NPA norms. In the sense, it's not a central government guarantee per se. It's only an insurance product which is offered to the bank through central government process, that is CGTMSC process. So the normal NPA norms are applicable, and where the CGTMSC coverage will come into picture is only to the extent of making a provision on NPA portion of that NPA product. So it's not that it is considered at par with central government guaranteed accounts, wherein the accounts are required to be treated as PA, even though the NPA norms are fulfilled. So understand that what kind of insurance is available to the that particular product, like say CGC insurance is there, CGTMS is there, or any other sponsored scheme is there, and then draw your conclusion based on that as to how that will affect the bank product process or review, I should say. Then obtain GLPL and financials of that particular branch where you're doing the audit. And don't just obtain the financials of GLPL only on as of 31st March, but also try to obtain a couple of earlier financial cutoff date GLPLs. In the sense, if you're doing audit of 31st March, it's always prudent to obtain maybe a week before that GLPL, so that you know the divergent trend, if any, they are existing in the branch. So at multiple 4 or 5 dates, if you get the GLPL of the branch, you will understand that what is the overall trend which is there at the branch as far as the deposits as well as advances are concerned. Then once you have a fair idea about the overall bank which are going to branch which are going to audit, have distribution of work amongst your audit team, have audit program crystallize along with defined timelines. So your audit team is also aware about the timelines by which they have to perform and complete that work effectively. And you can also take an assessment as to whether you are able to complete the audit by the defined timelines which are there in the closing circular of the bank, or which are there in the communication which has been sent by the bank to you. And if need be, you might need to reshuffle your audit team, might need to rope in additional, audit team, personnel, in case if you feel that you are not able to meet the defined timelines. So before, planning, actually understand the bank product, understand the business which they are doing, and then only try to plan for the bank audits. Then the next part obviously is that initiate the verification process with predetermined samples. So always ensure that the samples are drawn, conveyed to the auditee. Always ensure that there is a randomness in the samples which are drawing. Ideally, it shouldn't happen that, the expected samples are only drawn by you. Like maybe just top 5 or top 10 accounts. Don't do that. Ensure that you cover at least one sample across each and every product which is, offered by that particular branch. Also ensure that when you are verifying that which are the products available in the bank, ensure that any type of loan which has been sanctioned or maybe available, having some balance in that particular account throughout the year, at least one sample is selected per product. So what you will also require is, besides GLPL of 31st March, is accounts opened and closed list, so that you can draw inference about different types of accounts which are there with the bank, that particular branch. And based on that, you can draw the sample which will be having a sufficient coverage of representative of each product. While performing the audit, couple of additional things which you need to ensure is that have a regular communication, a regular dialogue with the bank officials, especially wherever you are having adverse observations. Send those adverse observations to the bank officials for their confirmation. Nowadays, you can easily use email facility which is available instead of maybe giving it in black and white in physical form. And the advantage of immediate communication of adverse observation is that either the observation will get confirmed by the particular bank officials, or maybe there might be certain maybe compliances available with them, which may not be available with you for verification, which can be made available to you. And third thing is that when you close the bank audit, then you can always say that there was an opportunity which was given to be heard to the bank official. And if they haven't responded back on that, the adverse observation can naturally be incorporated in your final audit output. That is your audit report or LFAR or any other certification portion. It might happen that you might have sent requirement list multiple times. So always ensure that you are sending regular reminders to the bank. And what I will suggest is that at the end of every day, you can send a kind of a conclusive or the pending requirement list as a kind of a reminder to the branch, to ensure that the requirements are made available to you in time. And the delay in requirements or delay in giving requirements to you at times might be delaying your entire audit process is known to the bank officials. Then many times it happens that we have memorandum of changes entries which are suggested. We have audit conclusions which are qualificatory in nature, either in audit report or LFAR. Ensure that those are communicated beforehand with a clear-cut indication that how you are going to deal with that in case if that observation is confirmed by the branch official. So suppose you are having a MOC which is suggested for say divergence of NPA, make it a point that your query is pointed and concluding query. So unless and until there is a satisfactory explanation given to you, your conclusion is already drawn in the communication itself, or a qualificatory remark is drawn in your conclusion itself when you're giving an observatory comment. And take utmost precaution, especially in divergences which are observed, because observation of divergences is supposed to be extremely rare seen nowadays, especially in the background of RBI being very much insistent on system-based NPA marking. Now, let me spend a couple of minutes about this system-based NPA marking and which are the precautions which you need to take. See, first thing is that when we are talking about system-based NPAs, we need to also understand one thing is that the entire process is system-driven. So whatever master data is fed by the bank in the system, based on that, the system will behave. So if the master data is wrong or if the master data is insufficient, practically system cannot behave in the way it is supposed to behave. So just to give an example, I will give an example of say a restructured account. Now suppose the master data related to a particular account doesn't have a field related to restructuring of account. Practically you cannot draw inference as to how many accounts are restructured in that particular branch. So verify that whether the granular data is available in the system with respect to all the advances account and whether the sufficiency is there related to NPA norms. Another thing is that since it has been already established that all the banks are compliant with system-based NPAs, wherever you are finding any NPA accounts, it will tantamount to a process or tantamount to adverse qualification wherein the regulatory violation might be there. So kind of have it double checked before you give examples of divergences and conclude on that. One more suggestion which is there from my end is that bifurcate your divergences, that is additional NPs, into two parts. One is those which could have been identified by the system, but where the system has failed to identify, which is a kind of a serious regulatory breach. Second one is that there are subjective matters based on which you have marked an account as NPA, wherein system intervention or system identification may not work. Just to give an example, suppose there is a sufficient drawing power based on stock statements which are submitted by the borrower, but according to you, based on analysis of stock statement, you feel that sufficient DP is not available in a particular account, and that's why you want to mark an account as NPA, because based on your worked out DP, the account is continuously overdrawn for 90 days. I'm just giving a hypothetical example. Now, if that is the case, naturally the system will not be able to identify such instances wherein the NPA marking will be required to be done. So in those cases, it will be purely on the basis of your audit observations. You are identifying the divergences, which cannot be technically said to be a regulatory breach as compared to the earlier example which I gave. Another important thing is that always keep in mind that as far as RBI's master circular on IRAC norms is concerned, it is purely in the nature of identification of accounts, the accounting treatment with respect to the income which is not recognized. So the IRAC term itself is income recognition, asset classification, and provisioning norms. So that's what the nomenclature also means. So ensure that whenever such divergences or NPA marking is done by the bank, the accounting aspect is also covered. Many a times it happens that NPA marking is correct, but income recognition may not be accurately made by that particular bank. So make it a point that for all the NPA accounts, just have an observation based on the account statement as to whether the income recognition norms are complied or not. So just to put it in a nutshell about the income recognition norm, as far as the performing assets are concerned, income is recognized on an accrual basis. As far as non-performing assets are concerned, income is recognized on a realization basis, that is cash basis, along with one more thing which is required to be done, that as on the date of NPA, if there is any income portion which has remained unserviced, then to that extent, income is required to be reversed. Now, when I am talking about this date of NPA and income unrealized component, make it a point that you are reviewing the actual statement and going by simple yardstick, that whenever you say that income is service, what does that really mean in accounting terms? So it means in accounting terms is that first the interest has to be debited and subsequently there has to be a credit in that particular account. Then only the interest can be said to be served and not otherwise. So even if a borrower might have paid a lump sum amount in advance, but suppose that account has become NPA because of relational NPA concept, that is their other account has got into a NPA category, just because the advance amount is paid, it doesn't mean that the interest is serviced. So the amount may not be overdue, but the amount may be a kind of a unrealized component which is required to be derecognized as far as RBI norms are concerned. So always pay attention to this, I should say, technical things related to accounting portion. Second thing is that whenever you are talking about provisions, there are divergent practices observed in banks. There are some banks which have calculation of BDD are also carried out at the branch level. But most of the banks, what they do is they calculate basic things related to NPA. So date of NPA, income reversal, and asset classification and date of NPA is calculated at the branch, and the actual BDDR calculation is done at the head office level. So acquaint yourself with what kind of practice the bank is following, and then have your audit process defined, based on that. One more important thing which you can use it to ease out your audit process is that last year also CAQ has come out with Excel utilities, which are kind of excellent audit tools in various forms, right from audit programming, that is audit program drawing, till making a documentation process for various checklists, MOCs, attendance, and all these things. So have the CAQ Excel utilities used in your audit process if you're comfortable with that. My own experience is that you can very well make use of that and reduce your, I should say, time, or save your time in certain documentation processes. It's a kind of a ready-made checklist to ensure that you are complying with all the documentation requirement related to bank audit. So it's a fantastic tool. Make use of that. Now, other few things which I would like to suggest is ensure that you are regularly taking reporting of audit teams at every end of the day. Have a discussion held with each and every audit team person, right from the junior most person to the senior most person. Many a times there are queries which are raised by, I should say, maybe comparatively junior, staff, and those audit observations can also be very vital at times. And certain inferences you can draw from the reporting which is done by your audit team. And the best part about everyday reporting is that you at the helm of affairs as a partner or a signing partner or an engagement partner, you are well aware about how the audit is progressing. And if there is something which is going haywire as compared to the audit program planning which you have done, you can always revisit the plans and maybe induct additional manpower, maybe have a kind of a different approach for certain audit processes, and ensure that the audit is progressing in the line which you have sought. Another thing which I will like to suggest is whenever the audit is progressing, try to keep on updating your reports, LFR comments, and certification comments parallelly. So as and when a particular area is concluded, have the observations compiled, update those observations in LFR, which will ensure that none of the observation goes unnoticed or skipped at the end. And at the end, you don't have that burden of feeding everything in LFR format or adding that in your reports or certifications. So this will ensure that parallelly, your deliverables are also getting prepared. One more thing is that all of the branch auditors typically receive SA600 communication from the central auditor. Just go through that once. Typically, they will have clear-cut instructions given to the branch auditors, including expectation from the branch auditor. So, have kind of a question asked to yourself that whether the communication which is received to you from central auditor, whether you are in compliance with that or not, whether you are in compliance with expectation which are expressed in that communication or not. And if there is anything, which you are not able to do or not able to perform, the best way is that to go back to the central auditor, have a communication with the central auditor and understand that whatever is basic requirement. And in case if those are not compliable, it's better that you communicate with him, have a resolution, discussed related to that requirement, and then audit process can be again redefined. One more very vital thing is that typically the bank branch audit process, it's squeezed into maybe say 7 days to say maximum 12 days, I should say. Now, when I'm saying squeezing, actually, it doesn't mean that you should dilute on your audit performance. Only thing is that you need to keep a tab on timelines. And it is very vital that the timelines are revisited at every end of the day. And wherever you feel that there is a delay on the part of the bank, to give you the adequate data, documents, or evidences which you have sought, make it a point to communicate back to the bank by saying that this was required to ensure that the audit was concluded by the timeline which the bank has defined or by the timeline which the statutory central auditors have defined. So always try to make it a point to ensure that you receive all those things in time and everything is not given to you at the end of the day, that is at the end of the audit conclusion time period. So it shouldn't happen that you have started off audit on say 1st or 2nd or maybe on 31st. Audit timeline is say 8th and you're receiving all the documents by say 6th or 7th. So practically it may not be possible for you to conclude that by 8th. So the best thing is that keep on, harping on one point, that to conclude the audit at the defined timeline, you require the, required audit evidences, documents, files, well in time. At times, you might face an issue with certain ticklish, problems at the branch, or maybe your views are differing completely from the, bank's view. In that case, if you have any doubt, then don't hesitate to take assistance of SSB expert group, which is formulated every year and which typically operates from last week of March till second or third week of April, by the time all the bank branch audit gets concluded. Now, the best part about this expert group is that you can post your queries to the designated email IDs, and the queries are responded back within 24 hours. So don't hesitate to take this help. And always remember one point, that whenever you are asking for any help, your query should be very precise. You need to know that what you are asking for. And in that query, ideally, you should put forth your opinion and take a confirmation of that. So it's not that expert group is working for you. It's kind of a reconfirmation, reaffirmation which you can get. So that the audit process is strengthened at your end also, that you are first concluding the query, and maybe because of totally different views which the bank is expressing, you are just taking a reaffirmation from the expert group. Then once you have audit getting progress and coming to an end or a conclusive end, compile all your observations, including the adverse ones. And in certain cases, your normal observations will be also vital, because those are required to be given in your LFR. And of course, the adverse observations which are there, they will form part of your LFR. They might have to be considered at the time of drafting of the audit report also, because ultimately you are going to express a view on the financial statement or GLPL based on whatever is the requirement is there. And when you are expressing a true and fair view, you need to ensure that all your adverse observations are taken into consideration. They are factored into your audit report, because ultimate deliverable is of the independent audit report. So if there are any adverse observations which are going to affect your true and fair view, wherein, say, just to give an example, there is no sufficient provision is made by the branch for anything, or NPA classification is not correct, and if the branch is not ready to accept that, then you might need to qualify or modify your audit report. And then before you conclude the audit, ensure that you have a final discussion meeting with the branch officials and have an exit meeting with them before you conclude the audit. Then subsequently, you need to obtain a MRL, that is management representation letter. Earlier, there used to be a couple of issues with obtaining of MRL at the branch level, but I think since last couple of years, this has got ironed out. So you will be getting a MRL from each and every branch, and that is a kind of a must for you as a branch auditor, and even as a central auditor, I should say. The bank audit guidance note contains an illustrative MRL. Make use of that, but I will suggest that use that as a base and develop your own MRL based on the requirements which you face at the branch level. And don't hesitate to put in each and everything in the management representation letter, especially on the points wherein you have a different view and the branch is having a different view. So let that be put in black and white in the representation letter itself. So if the branch is not agreeing with your views, that other view of the branch or the bank official should appear in MRL, and then of course you can take a stand. So just to give an example, suppose you have marked an account as NPA for a particular reason, and if the bank is not agreeing on that, let that be becoming part of MRL. And if there is a representation made by the bank to you about a particular point, it is not mandatory for you to accept that as it is. It's only a representation which the bank is making. So as far as view is concerned, the final view has to be taken by you as to how you want to conclude that. So it's not that at every point of time and at every adverse observation, views of auditor and auditor should agree, should be at the same level. So there might be instances wherein you are of the opinion that MOC is required to be passed. Bank is of the opinion that MOC should not be passed. Let it be. Let that be appearing in MRL, wherein let the bank say that they are not agreeing with your view, and you can very well still pass a MOC and say that the bank is not agreeing with that, but you want to put forth that particular MOC. So don't shy away from that angle. Then have a final version of audit report, certificate, LFAR, discuss with the branch manager. And that's why I said that your continuous communication with the branch official is a must actually for bank branch audit, wherein when you come out with a final version of audit report or LFAR, there should not be any surprises for the branch also. And there shouldn't be any kind of a surprise reaction from the audited side also. Because once you communicate everything, to them, at the end of the audit, what you're doing is only compiling all the communication which you already made, wherein you may or may not have received any feedback. So those areas wherein you haven't received the feedback, you can actually simply compile that, and that becomes part of your deliverables. Wherein you have received the feedback, go through the feedback. If you are satisfied with the feedback, you can always have that adversity resolved, make a documentation of that, and always ensure that each and every response which is received by the bank from the bank's end is documented by you. At times, it might happen that there might be a physical discussion with the branch manager, and there is a satisfactory explanation which is given by the branch. The best way to document it is that prepare a kind of a minutes of the meeting, have it sent across to the bank for confirmation. So once that is confirmed, that will become part of your audit working paper file, and that will take care of your required documentation process, for any bank audit. Then the next and very crucial part is that have audit file compiled before you sign off all your audit report. Ensure that working of the soft copies of your Excel working or anything which is there at the branch is received to you, because many times it might happen that there is certain data made available to you on the bank's desktop machines. You have worked on that. So the working which you have performed or working which you have done at your end has to be received and taken in your possession. So ensure that hard copies, soft copies, in whatever form you are having audit working paper files, are compiled and taken with you when you are concluding the audit, and you are not leaving anything which is not taken on the record. Then another thing is that we need to have a good practice actually to take a subsequent feedback from the audit team, because what we typically lack is many times we conclude the audit well in time. So it's not that we don't conclude the audit. We conclude the audit well in time, and somehow we manage the timelines also. But at times we feel that there are certain precautions which we could have taken before start of the audit, which would have maybe smoothened the entire process of that particular branch audit. So good practice is that take a feedback from the audit team, maybe after conclusion, after a gap of say a day or two, jot down all the points which might be kind of a vital point for subsequent bank audits. You might have missed out on certain things. You might have not exactly missed out, I should say. You might have got insufficient time to verify certain things, or maybe that you realize that certain areas are there wherein a particular bank is not that strong, and that is the constant area wherein audit should have been concentrated. So make those things jotted down. Another thing is that ensure that you are properly storing the audit documentation both in soft and hard copy format. Take adequate backups, especially of soft copies, which you might have been taken on the record as audit, working. And the conclusion part is that you need to issue an invoice along with the attendance sheet based on whatever the process which has been defined by the bank. So this was just a kind of an overview, which I thought that I will just give you. And I've just jotted down all these points as a kind of pointers in bank audit. So besides that, let me just talk a little bit about other basic considerations, or which are the vital circulars are there of RBI on a broader basis, not on a specific point as such. Now, broadly, I will define 2-3 circulars which are vital ones as far as certifications and audit report and LFR are concerned. First one is the capital adequacy circular. Second one is IRAC norm circular. And third one is that there are certain schemes wherein certifications are there, like say priority sector lending and other things. Now you need to be well aware about the basic structure or the basic, I should say, RBI circulars which are applicable to each and every area. So we'll go balance sheet wise. And when you look at the balance sheet, and I will come to the profit and loss account a little subsequent to that. There are two parts broadly of balance sheet: deposit side, which is a liability for the bank, and advances side, which is asset for the bank. Now, when you talk about the liability side of deposit side, what you need to be well aware about is that you need to be aware about the KYC norms, AML norms, which are applicable in the bank, how the bank has adhered to that. Always make it a point to draw a sample and check that AML as well as KYC norms area on a sample basis. Maybe you, again, as I said earlier, you can just use couple of or maybe one sample for every type of product of deposit which the bank is offering, and ensure that how the KYC compliance is done as far as every product is concerned. Secondly, acquaint yourself with the type of products which are offered by the bank in deposit side. Now you need to be aware about certain RBI circulars related to that. Now the first one is that as far as deposits are concerned, the interest rate related circular is there, which you need to be aware about, that how the bank can pay the interest and what are the conditions which are applicable to payment of interest are there at the bank. Similarly, if you are having, say, forex business, in a particular bank, you need to be well aware about that RBI circulars which are related to foreign currency deposits. And you need to be well aware about how that mechanism works, which differs from the domestic deposit. Just to give an example, as far as the FCNRB deposits are concerned, if it is a cumulative deposit, the compounding of interest, unlike domestic deposits, is on a different term. So suppose you have 1 year FCNRB deposit, if it is a cumulative nature of deposit. In case of domestic deposit, as all of you are aware about that, it's a quarterly compounding concept. But FCNRB, it is 180 days concept. So the concept is that within a span of 1 year, there will be 2 half years plus there will be 5 days. So the compounding will be first 180 days will be the first component. Then next 180 days is the second component for compounding. And after that, for 5 days, the compounding will be done for those portion. So acquaint yourself about how the calculation of interest is made, even though I might be sounding kind of a basic thing, basics of banking. But many times it happens that the CBS system wherein you are working, it might have certain flaws which are technical flaws. So you should be aware about that. Let me give you another example. Typically, all the banks are having bank charges structure which is well defined. And there are, just to give two examples of bank charges. One is say SMS charges, second one is say minimum balance charges. We'll just take these two as the sample cases. Now, as far as minimum balance charges are concerned, what the RBI guideline is stipulating is, RBI guideline says that whenever a minimum balance charge is defined, it has to be charged on a proportionate basis. So suppose take an example that there is a bank wherein minimum quarterly average balance is defined at 1,000 rupees. And if the customer doesn't maintain that, the charges are say 100 rupees per quarter. Now, bank cannot charge 100 rupees if a customer is not maintaining that 1,000 rupees of quarterly average balance, but it has to be charged on a proportionate basis. So suppose I am a customer of the bank and I am having average balance of 800 rupees. Then in that case, I would be charged proportionately to the extent of 20 rupees. Because 20% is a shortfall for maintaining that minimum balance. Now, another, RBI requirement is there for banks actually to comply, is that in such cases wherein a particular customer is not adhering to the minimum balance requirement, the bank is required to communicate that to the customer, that say if it is a quarterly average, so maybe say in first month the average balance is not maintained. Bank has to communicate to the customer and tell the customer that your average balance is not maintained. Try to maintain that in subsequent period. So there has to be a communication with the customer. Customer has to be well aware about that. So all this customer related part also, make yourself acquainted and just have it checked on a test check basis. I'm not saying that you have to check it on 100% basis, but you need to be aware about what are the RBI regulatory guidelines are related to that. Another thing about customer related part, or I should say deposit related part, is besides the normal deposit portion, there are bank assurance services which are offered by the bank. Like say insurance product might be there, maybe mutual fund products are there, demat services might have been extended. So ensure that you are aware about those products which are sold from that particular branch and verify that how the accounting of that is done by that particular bank. Now, as far as these products are concerned, it's purely on the commission basis. So many a times this commission may not be accruing directly with the branch. It might be taken care at the head office level. But make yourself aware about how the accounting happens. And if the accounting or income recognition is not at the branch level, mention that categorically in your main audit report that this is not taken care at the head office at the branches, and it is taken care at the head office level. Now let's come to the advances part. I won't talk about coverage as such because LFAR categorically stipulates about what should be the minimum coverage, and that's a minimum norm, I should say. Now, when you talk about advances, you need to be well aware about the IRAC norms. That is the first and foremost thing. Besides that, you need to be aware about management of advances circular and exposure norm circular. Now, when you are verifying the advances, don't only concentrate on classification of advances. You need to be also aware about the management of advances part as to how the advances are given by the bank. What are the I should say operational areas which are linked with the sanction of loan? What is the entire flow from I should say application of loan which is done by the particular customer or the borrower till the closure of the loan? Now, all of you might be aware that RBI has recently issued a couple of circulars related to making the customer aware about certain things related to advances. And that communication is something which makes the customer aware about what are the terms of payments are given to him, what is the due date of payment, what is the rate of interest charged to him, what is the EMI, and how the account will come to an conclusive end, especially in case of term loan accounts. So ask the bank that whether the communication with the customer was made or not, and have some evidence handy with you to confirm that. One more important thing is that when you are verifying the IRAC norms, the basic and foremost thing related to IRAC norm is that the IRAC norms are per se uh, related to asset classification and other areas. You are concentrating not only on technical part, that is financial part, but also on non-financial parameters. Now, as far as non-financial parameters are concerned, all these non-financial parameters are kind of subjective in nature. So let me give you a couple of examples. I will just take 2 or 3 examples to demonstrate before you as to how you have to go beyond technical or financial parameters. Now, let's take first example that we are having, say, cash credit facility. Now, for cash credit facility, the basic norm is about out of order status, which is a financial norm. And as far as the other norms are concerned, there are norms related to non-renewal cases. So suppose the CCOD facility is not renewed within 180 days, the account will get marked as NPA. Now, these are non-financial indicators. Now, when we have financial as well as non-financial indicators combined together, we need to see that whether the bank is having a robust system to even capture the non-financial indicators along with financial indicators also. Another example is that suppose a particular loan is restructured, then in that restructured loan, we need to capture the restructuring date and restructuring parameterization. So what is meant by restructuring? Wherever there is any leverage or a concession given to the borrower by the bank, for any reason other than market competition, that account is called as restructured account and the account is required to be downgraded unless and until there is exemption given by RBI and wherein one can retain the class of asset. Now, in this case, actually, firstly, verify whether the system is able to identify an account as restructured or not. Because if you are not able to identify account as restructured, practically then it becomes a manual process. Similarly, in case of project loans, there is a DCCO which is required to be defined, that is date of commencement of commercial operation. Now, both fields are required to be available in the system. One is DCCO, that is date of commencement of commercial operation, and also date of achievement of commercial operation. Now, unless and until these fields are available in the system, the automation of NPA will never work. So understand that which are the limitations are there in the system, wherein the system is not able to identify a particular account into performing or non-performing. Then coming to the capital adequacy circular, make yourself aware about the basics of Basel III norms, which are applicable to all the banks. Make yourself aware about what is risk-weighted asset values, how the percentage, that is risk conversion factors, are applied to the every type of loan, how the netting of concept works in capital adequacy norms. See, basically, capital adequacy norms are related to the risk exposure which the bank is taking on the asset side. So each and every type of asset is having the risk of non-realization. That is, I should say, risk of realization. Now, for all the loan products, if you are having a liability related to the same custody, so for example, I'm having a housing loan with a bank and I'm also maintaining a saving account with the bank, the net exposure which the bank has taken on me will be always a net figure. So that is purely based on custody. Now, as far as the custody concept is concerned, there are shortcomings which are possible in the system. Let me give a couple of examples. First, I will give an example of a relational NP account, and then we'll come back to the point of capital adequacy. Let's presume that A and B are having housing loan. That account is marked as NPA. Now, the moment A and B joint account is marked as NPA, all other accounts wherein A or B are borrowers, those accounts will also get marked as NPA. So just to give you an example, A's vehicle loan will also get marked as NPA. A and C's other housing loan will also get marked as NPA. Similarly for B, B's another vehicle loan might be marked as NPA. B's gold loan will also get marked as NPA. Now all these are relational NPA accounts. Now similarly, when you're talking about capital adequacy, suppose you are having A and B as joint borrowers, you need to net off A's deposits also and B's deposit also against that AB's loan. So that the netting off concept will work in both the directions, not only for asset classification as a relational NPA, but also for netting off the exposure which is there in such forms of loans, because A and B are jointly and severally liable. So it's not that it's only, since the title of the account many times is the first account holder, only his deposit should be netted off, but also the second borrower, that is a co-borrower, even his deposit should be typically factored in. Now, besides these three basic circulars, there are multiple master directions, master circulars which are issued by RBI. My suggestion is that before you start off the audit, go to the website of Reserve Bank of India, have a list of RBI's master direction, master circular list, jotted down, and just correlate that with which circulars will apply to your branch, depending upon type of branch which you are handling. So that you have a handy kind of a reference material, that if you are doing a particular area of deposit, advances, or any other income related area, you know that which circular should be referred to, and adherence to which circular is required to be complied by that particular bank. So this was an overall, I should say, basic consideration which I thought that I will share with you. And if we can have a question answer of any participant, I will request Double SB to post those questions or have the chat box made open so that we can have a dialogue with the participants also. Any questions which are posted by the participants?
Hemchand Jain sir, you are there?
Just a moment, sir. Just a moment.
Ji sir, ji sir, ji sir. Sir, you will continue with your presentation, or you are through with your presentation?
No, sir, I'm through with the presentation. So the participant can pose the question so that those can be
So
answered.
they have posed certain questions, and sir will be asking questions, sir.
Sure, sir. Sure, sir. Definitely, sir.
Shall I ask, sir?
Yes, sir. Sure, definitely, sir.
Sir, there is some question from some of the participants, whether MRL is compulsory from public sector banks also?
Yeah, MRL is applicable for not only bank audits, actually, for any attestation or audit function, practically MRL should be taken. So whether it is a public sector bank or otherwise, for everything MRL is required.
Yeah.
In fact, I will go a step further, actually. It's not only required for audit report, it is also required for certifications.
Okay.
Because ultimately the auditee has to represent before the auditor about certain clarifications and presumptions based on which the auditor is issuing a certificate or a report.
Okay. Thank you, sir. And is it required to obtain NOC from the previous auditor in case of branch audit of a bank?
Yeah, it's required for every audit. Again, I will go a step further. Yeah, in fact, I will go a step further.
Yeah.
In fact, NOC, I shouldn't call it as NOC because NOC is, I should say, a common parlance word which is used.
Yeah.
It's communication with the previous auditor. And usually we write that content that whether you have an objection. So all of us call it as NOC. It's not really a NOC per se. It's a communication with
It's a
previous
communication and the information to be shared with
that has to be done not only for branch audit, actually. Since you're talking about bank audits in general,
Yeah.
I will in fact add a couple of points. Even if you are audited, appointed as a revenue auditor, as a concurrent auditor, or even as a stock auditor, you
Ji.
need to communicate with the previous auditor.
Yeah.
Unless there was no auditor which was appointed at any point of time. So
Okay.
nowadays, what happens is branches might be on a rotational basis. You may not have a previous auditor.
Of
So
course.
you can go backward and ask the branch that whoever is the earlier auditor, maybe 3 years back, 4 years back, whoever has done that last audit, you
Okay.
need to communicate with the last auditor.
Okay. Okay. Thank
Yeah.
you, sir. Thank you. And one more question, sir. Whether CIBIL score of a borrower of the bank has any impact on its classification of advances or analyzing through financial capacity or paying capacity of a borrower?
Yeah. See, as far as CIBIL score is concerned, that
Yeah.
is kind of, I should say, useful basis for bank to sanction the credit. For the
Okay.
auditor, actually, it doesn't have any ramification from asset classification point of view in a
Yeah.
direct way.
Yeah.
But let me just elaborate that point. See, ultimately, the bank has a prerogative to sanction a loan to any borrower of their choice
Yeah.
based on credit policy of the bank.
Yeah.
So let's take an example that suppose a credit policy defines a particular credit score as a minimum criteria, and the bank has breached that criteria. In the sense, the particular account has been granted advance even though the CIBIL score is not met.
Yeah.
Now, this is a kind of internal guidelines breach, concept. So the auditor has to report that in LFR in the appropriate, para about where the questions are there about the credit appraisal, that whether the credit appraisal, is properly done and other things. So their auditor has to point it out. But just because that guideline is not followed, the account will not fall ultimately into a NPA category. For that, the norms are defined.
Yeah. Yeah.
Now, there is only one area wherein this CIBIL score will be useful. Suppose the auditor is of the opinion that there is an inherent weakness in a particular account, based on overall operations, or just to give an example, like the account is continuously overdrawn throughout the year, and only at the year end, just by few hundred rupees, it has been brought into limit.
Yeah.
So there is an inherent weakness which is, seen. There are hardly any transactions. Now, again, inherent weakness is a subjective matter. Now, if the auditor is concluding that there is an inherent weakness, the CIBIL scores comes as a handy thing to support that claim. But it is not the starting point actually. It's only a
Yeah.
support
Yeah.
kind of a document which
Of
we can
course.
use.
Of
So
course.
just
Of
because
course.
CIBIL is not there, account will never turn into NPA
Huh.
category.
Okay. Okay. Anilji, Gokhale sir, shall we take some more questions, or
Sure, sir.
shall we continue after some time after your deliberations?
No, we can take all the. In fact, I
Okay.
just gave all the key considerations,
Okay.
so I
Okay.
thought
Okay.
that we can take the
Yeah.
questions.
Yeah. One more question, sir. In case of
Yeah.
major advances, can the auditor seek to obtain or seek our audit report of the client on reconciliation of stock statement, as per report to the bank and as per books of accounts, either as on end of the current financial year or immediately previous financial year? In case of adverse CARA report of the client, can the bank or branch auditor modify or qualify his report for the current financial year?
The question was about the region
Uh,
audit or the branch audit.
in case of bank or branch audit,
Yeah.
should the auditor obtain the CARO audit report, which is the private
Okay.
audit report of the
Audit
client?
is report.
Yeah,
Audit
yeah.
is report.
Audit is
Yeah.
report. Yeah.
Yeah.
In case of stock reconciliation and otherwise, so does it
Yeah.
impact the, yeah?
Yeah, actually, as far as part of normal routine process of credit appraisal, the
Yeah.
bank is supposed to obtain the latest financial statements.
Okay.
So suppose I am doing audit of say March 25,
Okay.
24-25 financial year. Naturally, my last year, means borrower's last year financials should have been available on the record. Now,
Okay.
when I say financials, actually, it should be a complete set, not only front page of balance sheet and
Yeah, yeah,
profit
of
and
course,
loss
of
account will
course,
go.
of
So
course.
I need to have Caro report available with me, and in fact, I will be more vocal about that. Many a times, the tax audit report is given as audit report, which is not per se a real
Which
audit
is
report.
not person, yes.
It's for a limited purpose. It is for a different purpose.
Yeah.
So one should go by the actual audit report, and there is a requirement of threshold actually, which every bank has to define, that wherever the audit is not mandatorily applicable to a particular borrower, like suppose it is a non-corporate entity, let's say a partnership entity is there,
Yeah.
and the bank has defined a threshold limit for non-corporate entities at say 1 crore. So all accounts above 1 crore need to have an audit report in place. Now, whether it applies to them or not, as per statute, is irrelevant. The
Yeah.
RBI guidelines says that the audit report has to be there. Now, once we say audit report, it has to be in SA 700 format.
Of course, of course.
So So one has to go through that. As far as
Yeah.
Caro observations are concerned, in fact, Caro has no observations about stock statement and matching that with the books of account. So the job
Yeah.
of auditor is much simpler now because
Yeah.
an independent statutory auditor will comment on that. Now
Yeah.
let's take a case wherein the statutory auditor is qualifying a Caro by saying that stock statements are not matching with books of accounts.
Yeah. Yeah.
So taking a little extreme stand, actually, I'm not saying that that should be the stand taken by all. But the moment a statutory auditor itself qualifies that the stock statements are not matching with books of accounts, it means that the stock statements are fictitious in nature.
Yeah.
Now, fictitious in nature, and if the stock statements are, in that format, technically one can invoke the fraud-related circular clauses.
Naturally. Naturally.
And why I'm saying that it is an extreme case, you need to go by the merits of the divergences or abbreviations which are there. Another thing is that besides audit report, I think the query was about the stock audit reports also. I think that was also mentioned.
Yeah. Yeah.
Ideally, all the banks are having a threshold defined, typically public sector banks, above which all the accounts are subjected to stock audit. So the stock audit reports are very much available. If those are not there, actually, you as a branch auditor can very well mention that in your LFAR. But I will go a step further. Suppose you are having doubt about stock statement itself, and you are not having sufficient evidence with you.
Yeah.
Technically, you have right to even visit the borrower's place on a case-to-case basis. It's not on a 100% basis, or it's not a mandatory thing. But suppose you feel that this drawing power is not there, based on documentation which are available with you. If the branch is saying that DP is workable,
Yeah. Yeah.
and there is a kind of a tussle, which many times happen. So
Hmm.
it's well within the powers of branch statutory auditor to even visit the customer, but that has to be used in a very rare case, I should say. It should not be a common kind of exercise. Otherwise, branch auditor will end up in a stock auditor's position. So that shouldn't
Yeah.
also
Yeah.
happen.
Yeah. Yeah. Yeah.
And if the reports are not available, like Caro is not available, one
Hmm.
has to mention that in LFAR by saying that credit appraisal process is weak because the audit report itself was not obtained, even though it
Hmm.
was applicable to that particular borrower.
Hmm.
So that
Okay.
has to be there.
And some of our participants are actually requesting you to advise on verification of premature payment of term deposits, although it's not a part of your deliberations, but
Yeah, sure, sure.
yeah,
See,
yeah,
as far as premature FD encashment is concerned,
yeah,
there are rules which are required to be predefined by every bank.
yeah.
And those rules are also required to be available to the auditor. In the sense, typically, the bank also has internal manuals, like say, or policies, I should say. So deposit policy, credit policies are there.
Okay,
So the
okay.
deposit policies will define the rules.
Hmm.
Now, when they define the rules, at times there are certain leverages which are also given. Like,
Yeah,
there are few banks, what they say is, in normal cases, if you prematurely withdraw the deposit, there is a 1% penalty on that.
yeah, yeah,
And if you prematurely withdraw and renew the deposit for a more tenure, so the
yeah.
due date is subsequent to the original due date, then they give a waiver of that 1%.
Waiver
Now,
of that.
that has to be defined actually. So it will entirely depend upon how the bank defines that. Now,
Uh,
let's take one simple example. Suppose I'm having a FD with bank, which is having a tenure of 3 years.
Yeah,
After 1 year, I want to liquidate that FD.
yeah,
Ideally, based on bank's rule, bank will typically define that what is the penal consequence of that. So let's presume that bank has defined 1%.
yeah.
Now, at times, there is a tricky situation which might arise that 3 years rate of interest is say 7%, and 1 year rate of interest is
Hmm.
say 8%, on a
Yeah,
higher side.
yeah, yeah.
Naturally, no one will is expected to get benefited because something is prematurely encashed. That is against the basic principle.
Of course, of course.
So ideally, what one should do is one should first capture the actual run period interest.
Yeah,
Let's say here it is 8% because 1 year was on higher side,
yeah, yeah,
and the original was say 7%. So you need
yeah,
to first take whichever is lower.
yeah.
They'll apply that 1% yardstick, and
Okay.
then give that effect to the calculation of premature FD. Now, these things also happen in case of special deposits. Like some banks are having 300 days deposit, wherein there is a higher rate.
Yeah.
So suppose I have a higher rate of say 9% for say 300 days.
Hmm.
I have a FD for say 5 years for 7%. And if I
Hmm.
exactly prematurely encash it on say 300 day,
Hmm.
I should never get benefited because the very reason why 1% or 2% penalties are there is it affects the asset liability management of the bank.
Yeah, yeah,
So the basic premise is that my liquidity position is affecting as a bank.
yeah,
So
yeah.
I need to penalize, in some form to the
Yeah,
customer,
naturally, naturally.
and that has to be communicated, to the respected depositor.
Yeah,
I
yeah,
will
yeah.
just add one more point since we are talking about interest on deposit, which I just briefly covered. But since we
Yeah,
are
yeah.
on that topic, I will just
Yes,
add one more
yes.
point. For consideration of branch auditor, I should say, I will not
Okay.
compel that.
Yeah.
So as far as interest calculation are concerned, there are certain things, which are, I should say, debatable. I will give one example of that. As far as monthly income schemes are concerned,
Yeah.
usually what we presume is, suppose the rate of FD is say 12%. I'm just taking rate for ease of calculation.
Uh-huh.
And I have opted for say monthly deposits, monthly
Hmm.
income scheme. So what I will always expect is at every end of the month, I should be getting 1% as interest component. Now, if you look at the actual calculation, the 1% calculation is never done. Actually, there is a slight discounting factor which is always applied. Now, when you apply the discounting factor, it has a background about why that exact 1% is not given. So when that exact 1% is not given, the background was that earlier there used to be a RBI guideline wherein the interest on advances was charged on a quarterly basis. So as compared to quarterly interest income receipt, there was an outflow of expenditure in the form of interest paid to the MIS scheme FD holders, which was earlier to that quarterly payment. So since uh, the income was on a quarterly basis and expenditure was on a monthly basis, there was a discounting factor which was applied, and because of that, the interest was paid on the lower side to arrive at the real value, that is a PV of present value of that interest payment. But now, if you look at the same logic, now the advances are having a monthly interest regime, and same way MIS will have a monthly interest regime. So just compare that what is the exact rate which is offered by the bank for MIS account holders, and in case of any discounting which is done, whether that was communicated with the customer or not. So you need to ensure that communication with the customer is a must, and that is of utmost importance. So you cannot simply discount it and pay it on a lower side. So I just thought that I will just add this particular point.
Gokhale sir, you may please continue. I'm just asking two, three more questions, which I have
Yeah.
just received. I
Okay.
was discussing it with some of my friends, and
Okay.
just want to put you on. Can you hold it for a moment, just?
Sure, sir. Sure, sir.
Sir,
Yeah.
it's a very actually they were appreciating about this deposits and premature payment of deposits. They came to know most of the things, many of the things about it, and these guidelines may be different, maybe varying from bank to bank, probably.
Yeah.
Or
Actually, guidelines don't differ. Only percentage might differ. Guidelines are
okay,
same across the bank.
okay,
Only
okay.
penal interest, that is
Penal
1%,
interest, it
2%,
might
1%,
be
that
1%,
will be.
0.75
Yeah.
or point 0.5 or whatever it may be.
Yeah. Yeah.
Yeah, okay, okay. And the second one thing is how to classify and verify sticky advances.
Yeah.
ये तो
Actually,
बड़ा
see, actually, first the word sticky, I presume that these are the accounts which are identified by the branch auditors.
sticky means
That,
identified.
yeah, they are already identifying it, and I will suggest one point. See,
Yeah.
first I will put forth my other view. Firstly, that verify that whether an account is technically NPA or not. In the sense, there are parameters which are defined by RBI. Like for term loan, it is more than 90 days
Yeah,
overdue component.
yeah,
CCOD, there are out of order status for 90 days. So those
yeah,
norms are well defined.
yeah, yeah.
There are non-financial parameters also which are well defined, which I talked earlier, like non-renewal cases or maybe
Okay,
restructuring cases, not
okay,
achieving of DCCO for project loans. So these are non-financials. Now,
okay.
if you find out something which is beyond that, the only
Hmm.
point is that you feel that our account is having an inherent weakness.
Yeah,
So
yeah,
if you have technical, point available related to account, you don't have to even get into subjective matter. The account has to be simply marked as NPA. There is no
yeah,
doubt about that.
yeah, yeah, yeah.
Even though you have maybe backup of security, maybe multiple times of the exposure, it
Hmm.
doesn't dilute that NPA status. So the account, once it is technically NPA or NPA as per the norms, I should say, the account
Yeah.
has to be marked as NPA. Now,
Okay.
suppose the account is not NPA technically, but you feel that there is an inherent weakness. I presume that that's what that sticky word is
Yeah,
used.
that's the only point he
Yeah.
wanted to
Now,
make.
how to deal with that is you might have certain observations related to the account. Now, I will suggest another way to put for that.
Yeah.
You send an email to the branch, management
Hmm.
or manager, whoever is the, manager, chief manager, AGM, whoever it is.
Yeah, yeah.
Ask them a simple question that give me the reasons that why this account is not considered to be having an inherent weakness. So it's a
Yeah.
kind of a negative confirmation which
Yeah,
will
he
come.
will definitely naturally come
So
to.
he has to demonstrate before you that
Yeah,
why bank doesn't feel that it is having an inherent weakness.
yeah.
So you don't have to say that the account you are already presuming that there is an inherent weakness. You can give
Hmm.
inferences that these are my observations.
Yeah.
Based on this observation, I want to have a representation from you
Hmm.
that why bank is not considering this account as account with inherent weakness. So let
Yeah,
the branch respond actually
yeah.
that in spite of all odds actually why they are saying that it is a good account.
Yeah, yeah.
Now, if something is there which they are able to say vocally, in the sense verbally,
Yeah.
and if they are not able to give it in writing, it's of no use.
Yeah, yeah.
So, whatever they are giving you as an explanation, obtain that in writing.
Yeah.
Based on that representation, if you feel that you are satisfied with that explanation, you can drop that. If you
Okay.
are not satisfied, still you can mark that account as NPA by saying that these are inherent weakness. So
Okay.
the actual, I should say, I shouldn't use the word power actually, but the ultimate
Yeah.
decision making power is always with the branch auditor.
Yeah, yeah, of course.
Yeah.
Of course. Thank you, sir. Thank you. And sir, one another question. Very. This is also a practical kind of question.
Yeah.
Is it maintaining a current account is permitted when the same customer is having an OD facility as well as in the same branch? OD facility as well as current account.
Yeah. Actually, there is an old RBI circular which categorically talks about non-permission of maintaining a current account, barring few exceptional cases. Like there might be a collection account. Sometimes, the borrower might be maintaining a collection account. So
Okay.
it's a collection account, CMS services account
Yeah.
for cash management. So at
Yeah.
the end of the day, the entire balance is swiped out of that account and gets into the main account. So if that kind
Okay.
of service is there, it's perfectly fine. Now, what the auditor should verify
Yeah.
that whether this current account is used for diversion of funds or not. So
Hmm.
suppose there is a current account with a debit freeze. So in
Okay.
that sense, it's fine to have a collection account. Ensure that SI is given. So at the end of the day, the entire amount is taken to the main account.
Okay.
But another thing which the auditor should ask the bank two questions. One
Hmm.
is that whether it is permitted as per their credit policy.
Hmm.
And secondly, what is the purpose of maintaining a current account?
Yeah.
So both these things are vital actually.
Hmm.
And unless auditor is satisfied with those answers, technically current account is not supposed to be maintained along with the CCOD account.
Yeah. Yeah.
And what I've seen is that almost all the banks are kind of prohibiting that unless there is a specific approval is given for maintaining a current account.
Yeah. Yeah.
So sometimes there are certain cases wherein borrower wants a separate account wherein he transfer the funds and distributes salary from his that account.
Yeah.
So
Yeah.
practically doesn't use that. It's only a kind of a stopgap kind of a thing. So
Of course.
amount is moved to that account, it is distributed. Or same
Yeah.
way, maybe for collections, he might be using a particular account.
Yeah. Yeah.
But then that diversion of fund is what auditor has to see. And
Yeah.
based on that,
Naturally.
it's going
Naturally.
to work.
Naturally.
Yeah.
Naturally. Otherwise, it is not required. Yeah. Of
Yeah.
course.
Yeah. Yeah.
Sir, one more thing. Sir, can you please arrange to provide a gist or preparations before going or a visit to to branch for audit? A gist of requirements.
Yeah.
Can you?
So actually, what I
You
will
know,
suggest is,
yeah,
yeah, I understand that. In
yeah.
fact, what I will say, there are two ready-made material which are available actually.
Okay,
One is CAQ is having an Excel utility, which is an
okay,
excellent utility, which gives the entire documentation list actually.
yeah,
And that Excel utility is having a toggle mode. So you can keep a tab of what is your audit progress also. It's a good
okay,
utility to use unless you develop it on your own in a different form. So that is one.
yeah,
Second is that the institute guidance note actually, it has an elaborative list of everything actually,
yeah,
including requirement letters also.
okay,
So make use of that requirement letter when you
yeah,
are
yeah.
going through there. And it's not only requirement letter, actually, it has MRL, engagement letter, audit report also.
Everything is there. We
Everything is
need to
there.
go through that, and then we will have a
Yeah. And
yeah.
I will just again clarify a couple of points that as far as guidance note physical copy is concerned,
Hmm.
physical copy is containing a material which is limited. But if you go through the institute website wherein
Yeah.
the bank audit guidance note is hosted, there are appendix which are there, wherein all these illustrative formats are also there, which are not printed. So they
Okay.
are available in soft copy format. just visit the Institute SSB's website, wherein the bank audit guidance note is hosted, and you will get that entire requirement list also readily available with you. Along
Yeah,
with
yeah.
that, there are certain chapters, actually, specific chapters,
Of
wherein
course.
illustrative lists are also added.
Yeah.
So depending upon which area you want to, verify while performing the
Of
actual audit
course, of
also
course.
are available.
Yeah.
And prior to audit also, the requirement lists are already made available. So just
Yeah,
make
yeah.
use of that.
Yeah. Complete requirements are there.
Yeah, yeah, yeah.
Yeah. And sir, one more a very great question is there. What would be the rules related to appointment of internal audit of banks?
There are no rules actually about appointment of internal auditor. See, since you're talking about internal audit,
Yeah.
uh, RBI circular is there about appointment of concurrent auditors. Now, when you
Hmm.
talk about the internal audit, I will just bifurcate that assignment into a couple of areas.
Yeah.
Bank might have a concurrent auditor.
Hmm.
They have own inspection system which is there.
Hmm.
Then they have revenue audits at times. They have
Hmm.
stock audits.
Hmm.
They have diligence audits also.
Yeah.
Just to talk about and credit audits. So these are 6 areas wherein you can say they are part of internal audit process. As far as concurrent audit is concerned, RBI has already issued a circular, so the bank has to comply with that. Now, as far as that circular is concerned, it gives an option to the bank either to conduct concurrent audit internally or to seek
Internally.
the help of external auditor.
Yeah.
Most of the banks are having panels of concurrent auditor maintained. So that is one way to look at that. And as far as coverage is concerned, the guiding factor is RBI circular. But typically banks will go much beyond that. And they might be defining a particular scope for a concurrent auditor, depending upon the bank structure. As far as inspection is concerned, earlier, means I should say long back actually, up to maybe 2000 to 2003, 4,
Yeah.
even the inspection function at times was outsourced by a couple of banks,
Yeah.
which RBI objected, and after that inspection is never outsourced. It has to be
Yeah.
done
Yeah.
internally. Then recently, risk-based internal audit are also in place. It's not recent actually; it's more than a decade.
Hmm.
But risk-based internal audit is prohibited to be outsourced. So risk-based internal audit practicing CS cannot do. It has to be an internal process. Then stock audit, again, it's outsourced function, part
Yeah.
of internal audit. Credit audit is outsourced function. Diligence audit is something wherein one can think of getting empanel. But the question is how to get internal audit is that you should get
No, no,
empaneled, and
no.
then only you will get appointed. There is no other way for that.
Yeah.
And it's individual banks empanelment. It has nothing to do with
Individual banks empanelment. Yeah. It's not universal. Yeah.
it's not universal. There is no other
Yeah.
criteria
Yeah.
actually.
And one thing more, sir, overvaluation of security provided for loan,
Yeah.
like property, land, stock, trade receivables, net worth, etc.
Yeah.
And later the loan become NPA and not
Yeah.
able to recover loan due to overvaluation of loan.
Yeah.
Uh, so, and there are huge balances in NPA, non-operating FD and saving bank accounts. Bankers says
Sir,
not
I'm not
able
able to hear
to
you.
trace the customer. Oh, this is a different question. But overvaluation of due to overvaluation of security, if bank is not able to recover the loans, then this will go for recovery naturally. Matlab, there is a question mark. What should the auditor see towards that line? Dhananjay ji, I think you are not audible. Anil ji, Anil ji,
Yes, sir. Yes, sir.
Anil ji, Dhananjay ji is not audible, I think.
Yeah.
Let me check, sir. Let me check.
Some issue was there, I think.
Yeah, yeah, yeah.
Yeah.
Now it is okay, sir.
Yeah. I
He
think
is
it's
visible, but voice is coming, but visibility wise, he doesn't seem to be in his speaking mode.
Ranjit sir, it is okay now.
yeah. From my end, it's
Communicate.
okay. I am able to hear.
Acha, you are able to hear, sir.
Video is not
Yeah.
coming.
Yeah, sir. So,
Your video is not coming.
Yeah. Just a
uh,
minute, sir.
नहीं, Dhananjay ji's video is coming just in a
Sir, I'm
quoted.
able to hear. Maybe some problem with video. You
Yeah,
can
Maybe
post the
that,
query.
no
some
issue,
Yeah.
sir. No
problem.
issue. We can
Yeah,
carry on. We can
but you
carry
may
on, sir.
carry on, sir. Yeah.
Yeah.
Yes,
Yeah.
sir.
Yeah.
Sir, so due to overvaluation of property or assets, any assets, mortgaged assets, the loan becomes bad or NPA, then
Yeah.
the auditor's responsibility or auditor's, what should be the view of the auditor on that?
Yeah. Sir, actually, whenever there are instances of overvaluation, firstly, the auditor should be aware, or he should be able to prove that there was overvaluation, which at times is not that easy.
Okay.
At times it's just a guess actually, which is there. But suppose there is a evidence which is available about overvaluation, then there are two repercussions which will evolve out of that. One is that auditor has to see the fraud angle related to that, as to
Hmm.
whether the loan was sanctioned under the garb of overvaluation. That is the first thing. Second thing is that there are RBI guidelines related to the accounts wherein there is a deterioration in security value. So there are two basic guidelines are there. One is that wherever there is a deterioration beyond 50% as compared to the earlier valuation, the account will be straightaway taken to the doubtful asset category instead of passing through substandard and then doubtful category. So that is one way to look at that. Second thing is that in case of secured loan, if the security value is less than 10% of balance outstanding, then that can be directly classified as a loss asset. So these are two tools which are available with the auditor wherever there is a deterioration. Now, if the deterioration is because of overvaluation, like earlier report was overvalued and now the report is a normal one, and if it is crossing that 50% breach, it's a combination actually. It's a fraudulent thing also which has happened,
Yeah.
and the auditor should also mark that account as NPA if that is the real reason. But only my submission is that uh, make yourself 100% sure that it was overvalued.
Yeah,
In
yeah.
the sense, when you comment in your audit report, you need to have that sufficient evidence available with you.
Yeah.
Shouldn't be purely on the basis of that. And if you're really sure, you can ask the bank to seek another valuation also. Like
Okay.
suppose you are doing a bank or a branch
Yeah.
audit
Huh.
where you reside, so you are well aware about the valuation. So in
Yeah.
that case, you can seek another valuation report also.
Hmm. Yeah. Thank you, sir. Thank you. And related to this, sir, there are huge balance in non-operating FD and saving bank accounts. Banker says they are not able to trace the customer. How
Yeah.
to handle that kind of situation?
Now, if there are non-operative account, dormant accounts which are there,
Yeah.
so auditor per se doesn't have any responsibility related to that. It's up to the
Okay.
bank to take care of that.
Okay.
What auditor has to verify is that whether the dormant accounts are marked after 2 years of non-operational thing.
Yeah.
That is first thing. Now, wherever there is no customer-centric transaction which has occurred in the that particular account, that account can be marked as dormant account after a gap of means after a period of 2 years.
Okay.
Non-customer-centric means if there are only bank charges and bank interests which are appearing, say in a
Yeah.
saving account,
Yeah.
that's a non-customer-centric transaction. But suppose
Yeah.
there is a FD wherein there is a standing instruction, it's a customer-centric account. So in
Hmm.
that case, the account will not be called as dormant account.
Yeah.
Now, after that account is marked as dormant account, and if that position continues for a period of 10 years, then that will be transferred to
Okay.
DEF fund. So, auditor has limited responsibility to see two things. One is that whether dormant flagging is correct, and whether after 10 years the account is or the amount is getting transferred to DEF or not. And beyond that, irrespective of whatever is the size of that deposit, auditor doesn't have to play any role in that.
जी.
Yeah.
ठीक है, sir. Sir, another question is, Anilji, shall I take another 2, 3 questions?
Yeah.
Yes, sir. Please, sir. Please.
Gokhale, sir?
Yeah, sure. So we have ample time.
Okay, sir. Sir, another question is, how can an auditor identify mule accounts?
Mule accounts.
Yeah.
See, as far as identification of mule accounts is concerned, first thing is that it is not in your scope to identify such mule accounts. So my suggestion is that first see that what is your scope. So
Yeah.
suppose during your normal audit process, you are not an investigator actually.
Yeah, yeah.
So I'm presuming that the appointment is not for investigation. If it is for investigation, there are different things. It's a forensic, approach.
Okay.
Presume that you are a normal auditor doing
Hmm.
either a statutory or maybe a concurrent or an internal, assignment.
Hmm.
Your focus should not be on finding out mule accounts.
Yeah, yeah.
The
That is
focus
the.
should be to test check and see that whether the internal control mechanism works or not.
Yeah.
Now, if a Benami or a mule account is opened,
Hmm.
then primary responsibility of the bank and your responsibility is that when you're drawing a sample,
Hmm.
based on the documentation which is available related to KYC at the branch, if you feel that the satisfactory evidence is available,
Hmm.
you are not at all responsible for all such accounts. So you
Okay.
need to act diligently, and you are not responsible for blanking which is carried out at the branch.
Okay.
So you are responsible only for expressing an opinion and not about how the operational functions are. I will just maybe, I will give an example. Like typically in AML, uh, if you want to really test AML on a test check basis,
Hmm.
so there are prohibited, list of entities and persons which is published at a regular interval, and it is updated in CBS system.
Hmm. Hmm.
At the most, what you can do is that you can type out one of the name
Hmm.
and see that whether the account can be opened or not. Only
Hmm.
that exercise you can carry out.
Okay.
But
Okay.
otherwise, you don't have to take that onerous responsibility to identify mule accounts
Yeah,
or
yeah.
prohibited accounts.
Yeah, yeah.
That is something which is, I should say that beyond the
Yeah.
scope, and one should not venture into that because that's
Yeah,
an
yeah,
industry.
yeah. Thank you, sir. Thank you, sir. Sir, one more question is there. How would the auditor be sure that there is an overvaluation? I believe if the value recoverable is lower than the amount outstanding, classification of the loan is to be made as per applicable prudential norms. But sir, as you said just before that, overvaluation, this is only this is the criteria of the bank, and the valuation they might get the valuation from the approved valuer, and then auditor may have an opinion on
Yeah,
that.
yeah. Actually, sir, the moment auditor has concluded his observation that it is overvalued, presuming
Yeah,
that there is evidence which is available.
yeah, yeah, yeah.
Second thing is that auditor should ask himself that whether he is considering that as a deterioration in value,
Hmm.
which probably will turn that account into NPA because of inherent weakness. Because for as far as that straightaway classification norms are concerned, auditor has to take a view about that such instances wherein 50% and more deterioration is there.
Hmm.
In all other cases, naturally secured unsecured portion will change.
Yeah,
And in an extreme case, as I said, that there might be a fraud possibility wherein overvaluation is done and loans are sanctioned.
yeah, yeah,
Another way to look at that is that it might result into a scenario wherein inherent weakness might be evidence because of that.
yeah, yeah.
But beyond that, you cannot predefine objectively as to how to deal with the overvalued thing. You need to
Gee.
see it on a case-to-case basis. Take
Case
a
to
call
case.
on a case-to-case basis.
Yeah, yeah, yes, yes. Sir, there is a very big emphasis on NPA. Sir, please advise on payment made on last day so that it comes out of NPA list. How to identify such loan account and how to report the same in report.
Yeah. See, as far as last day regularization is concerned,
Hmm,
presuming that the fund flow actually, in the sense the receipt, the source
hmm,
of the funds,
hmm.
if it is genuine one, there is no harm in treating that account as regularized. And
Okay.
what is not so genuine, let me define that because
Hmm,
that's what auditors should verify. I will
hmm,
give an example of say a company corporate is having a loan,
hmm.
and the simplest thing which bank should never do is that sanction a new loan and regularize
Yeah,
the,
yeah, that is,
which is a straight away case of a evergreening, which typically no banker will do.
yeah, yeah.
But there might be a case wherein maybe say a director has taken a loan in his personal name, who is a
Hmm.
promoter also. He
Okay.
has introduced those funds into that particular account
Hmm.
as a contribution towards equity or maybe advance extended by director, whatever nomenclature it is.
Yeah, yeah.
In that case, actually, you need to go to the root of how the fund is received in that account.
Received in that
So
account.
even if it is sanctioned in third party's name,
Hmm.
but if there is a loan which is regularizing another advance account, then it cannot be a genuinely regularized account, and the account
Yeah.
will get marked as NPA. And over and above that, that
Hmm.
other account should also be marked as NPA because that is the source.
Hmm.
Then only the
Of
entire
course.
amount will be captured because otherwise that amount will never be captured. The regularized quantity.
Otherwise, that never
That
be.
is one.
Yeah, yeah, yeah.
Second thing is that there are multiple cases wherein throughout the year the account might be NPA and on the very last day, on 31st or 38th,
Yeah,
the entire overdues are paid.
yeah.
Now, in that case, actually, if it is a CCOD account, you need to handle it in a very delicate term. In the sense, you need to see the overall performance.
Hmm.
But suppose it is a term loan account,
Hmm.
a standalone term loan. Let's say housing loan is there,
Hmm.
and that account is regularized at the last date, 31st March. There are
Hmm.
no overdues are there, no relational NPAs are there. In the sense, the relational accounts are also within the limit. There
Hmm.
is no harm in upgrading that account. There is absolutely no issue. Provided on one condition that you are satisfied as an auditor that what is the source of fund. If
Okay.
you feel that the source of fund is some other finance, maybe taken from NBFC, you might see that there is a entry in saving account
Yeah, yeah.
from say some NBFC, and from that the amount account is regularized. You can say that it's an inherent weakness. You
Hmm.
cannot borrow from someone else and regularize your other borrowings.
Yeah, yeah, yeah.
In that case, you can insist on same classification, but otherwise there is no harm.
Yeah.
And since this topic is there of last date, let me just add one more point. Subsequent regularization is of no use. Whatever is the position on 31st March, that has to be factored into it.
That has to be
So
fixed.
technically, even if an account is closed on 1st of April,
Yeah.
still the account will be NPA on 31st March, provided
Okay.
that it was in NPA category. So even closure will not work.
Okay. Okay.
So whatever is, because we are signing balance sheet on 31st
As on
March.
31st March.
So
Yeah.
whatever is the position on 31st March, that has to be factored in.
Yeah. Yeah. Thank you, sir. Thank you. Sir, can bank give loan against gold bars? How to report these cases in concurrent audit report? Kindly give RBI circular number if available.
So recently, 2 months back, I think RBS came out with a circular, but there is a elaborate circular on management of advances,
Yeah.
which talks about elaborately about which type of gold loans are possible,
Hmm.
what kind of securities can be taken as underlying security,
Hmm.
which prohibits certain kind of gold like gold bar and gold coins.
Yeah.
So just refer to that circular. Go to the RBI website. Go to
Yeah.
management of
Yeah.
advances. I don't recall instantly whether it is a master circular or direction, but either of it is there, which has a elaborate guideline about that.
Yeah. Yeah. You're right, sir.
Recently, RBI came out with another circular about gold loans,
Hmm.
wherein evergreening was evident. Like
Hmm.
earlier loan was closed and new loan was opened with the same security. So
Okay.
RBI is also very keen on that aspect, that gold loans is a form wherein there are certain aberrations which are observed.
Yeah.
One more thing which I will add is there are bullet payment gold loans related guidelines are also there. So since the topic is about gold loan, ensure that those guidelines are strictly followed by the bank.
Yeah.
And you need to be well aware about what is meant by bullet repayment. So I will just add that point.
Yeah.
As far as bullet repayment is concerned, it means that all dues are paid on a particular date. So interest as well as principal is due after 1 year. That is bullet repayment.
Yeah. Yeah.
Even if interest is paid on a regular basis,
Hmm.
it doesn't form part of bullet repayment concept.
Yeah.
So principal might be bullet repayment, interest is regular, so it gets out of the definition.
Yeah.
So
Yeah.
as an auditor, you need to be well aware about what are the RBI guidelines.
Hmm.
And secondly, what type of advances a bank can give, or what kind of underlying securities a bank can take.
Yeah. 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 So, Anilji, is there any, sir, there's a last question. How many items can we select under each type of loan products for analysis since time poses a limiting factor? How many items can we select under each type of loan? Uh,
Yeah, sir, my suggestion, in this question is that firstly, ensure that the minimum criteria which is defined in LFR, that is more than 10% or 10 crores, that is a criteria which LFR has defined.
yeah.
So all loans which are falling in that criteria, that is above that threshold, has to be checked on a 100% basis. That is first thing.
Okay.
Second thing is that below that, it's your discretion to choose. My
Hmm.
suggestion in that is at least one sample from each product should be considered to ensure that you have completeness in sample checking. Because mandatory is already defined by LFR. So at time it happens that let's presume that there is a MSME branch, or a personal banking branch is there, when all accounts are below that threshold only. And
Yeah.
maybe multiple, there are number of accounts are say 10,000 accounts. So it becomes little tricky for the auditor to choose that how many samples I should select. Now
Yeah.
remember only two things. One is that once you have all samples selected, you have completeness in your sampling techniques. That is first thing. Second thing is that in LFAR, you need to mention that which accounts you have chosen for audit.
Sure.
So suppose you have chosen 20, give those 20 listing. If you have chosen 8, give those 8 accounts.
Yeah. Yeah.
You need to satisfy yourself that as per standards on auditing, the sampling technique was adopted by you, and you are satisfied as an auditor that sufficient sample was selected, which is a representative of all the loans. So that's why I gave a simple yardstick that choose at least one, one sample from each product. So it gives you a completeness. If you want to go beyond that, ultimately, it's your discretion. But minimum is LFAR plus per product one. And again,
Yeah,
that is my personal view.
yeah,
LFAR doesn't define that you should select one sample from each product.
yeah,
But
yeah,
that is an easy way to choose a sample. So that's why I suggested.
yeah, yeah,
And time factor is always there. Now,
yeah,
that's why I initially said that when you get the appointment letter, first make sure that you are able to meet those deadlines. If not, then better not to take that assignment.
yeah,
Secondly, it has to be a reciprocal process. So suppose the deadline is given to you on 8th, you write a letter of requirement to the bank that I want all the requirements ready for me for verification on 2nd, or say maybe say 1st, because it's linked with each other.
yeah,
Suppose 8th is the deadline, I cannot have details given to me on 5th or 6th. I cannot perform the audit.
yeah, yeah,
But ensure that documentation is done for all your requirements. And verbal communication is not a documentation process. It has to be
yeah,
in
yeah,
writing, black and white
yeah.
or email.
Yeah, yeah, yeah. Thank you, sir. Thank you very much. I think all our participants have got the in-depth knowledge of your this classification from appointment to the audit techniques to the audit sampling techniques, as well as the NPAs and deposits, or every kind of even audit appointment, and how to do the audit and how to get the refer the RBI circulars. I think everyone must have impressed. If there is some another question, it's again welcome. And धनंजय जी इज देयर, और धनंजय जी ने हमें बहुत अच्छी तरह से एक संतुष्टि की सीमा तक पहुंचाया है वैसे इसमें। बाकी अनिल जी, आप कुछ कहना चाहें तो मेरे ख्याल से मेरे पास और कोई सवाल नहीं है फिलहाल।
Sir, it was wonderful experience to have you here, sir. Wonderful interactive session. Participants have raised so many queries, and you have answered all the queries in a very effective manner. Thoroughly speaking, we I have gained a lot through your deliberations, sir. So, on behalf of AASB of ICI, I extend my heartiest thanks towards you for sparing your valuable time and enlighten all of us various intricacies in this bank audit, as well as the pre-planning before the going to the for the bank audit. You have apprised every member regarding the requisite which is required before visiting the branch, as well as the various intricacies regarding during the bank audit. And you have shared the in-depth knowledge as well as insights regarding this bank audit. Thank you so much from the core of my heart, as well as on behalf of AASB of ICI. I extend my heartiest thanks towards Hemchand Jainji for wonderfully coordinating today's webinar, as well as so many. It was a long question answer session and interactive session, and handled by you, sir. Thank you so much, Hemchand Jain, sir, for giving your kind consent and coordinating this webinar. Once again, on behalf of AASB of ICI, thank you so much, Dhananjay, sir, for such a wonderful, detailed, and elaborative deliberation, sir.
रंजय जी,
Thank you, sir.
आपके वर्ड्स
My
के
pleasure,
लिए
sir.
आपको बहुत बहुत मतलब धन्यवाद। एक बहुत छोटा सा शब्द है, बिकॉज आपने हर तरह की क्वेरी को
Yes, sir.
और
Yes, sir.
बड़े
Yes, sir.
बड़े
Yes, sir.
सुंदर तरीके से हर किसी को ऐसे समझा दिया है कि आई थिंक
बिल्कुल सर।
नाउ द माइंड इज वेरी मच क्लियर व्हाइल गोइंग ऑन ऑडिट और कंडक्टिंग द ऑडिट टेक्निक्स एंड ऑल सब कुछ। तो
जी
वी आर
सर।
रियली इम्प्रेस्ड, एंड आपके सेशन के लिए बहुत बहुत धन्यवाद।
Thank
थैंक
you, sir.
यू वेरी मच।
More than 1,600 participants are still here on this login. 16 more than 1,600 participants are there, sir. So thank you so much once again. I also thanks all the participants of today's webinar also, sir. Thank you so much. Good evening. Namaste.
थैंक यू सर।
Namaste.
Namaste. Sir. Namaste.
थैंक यू।